All right, check out all the holiday characters.
Well, all right, Santa ringing in the bell there.
And Santa, as we hear the closing bell, ending the trading day on Wall Street after closely watched remarks from Federal Reserve Chair Jerome Powell.
Well, I guess that Santa is appropriate. There's a lot of green on the board today, an early Christmas gift, I guess. You can see that the Dow Jones rose significantly after Powell's speech. It closed up more than 700 points.
Wow, pretty incredible. The S&P and the NASDAQ both saw significant gains as well. The S&P closed just under 3%. The tech-heavy NASDAQ ended the day in the green, up roughly, 4.25%. Let's bring in Larry Adam. He's the Chief Investment Officer for Raymond James. And Larry, of course, Federal Reserve Chair Jerome Powell's speech took place just before we saw that green bump there on the Dow. Let's, for our viewers, just quickly listen to what he had to say.
It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level.
That comment led to massive gains on the Dow. What, in your view, was significant about what he just said, other than they're going to moderate the rate of increases? Or maybe that's
But that is significant, yeah.
Yeah, I mean, I think that is a significant thing because that's really the first time that the Fed, particularly Chairman Powell, has acknowledged that raising rates could significantly slow down this economy and take us into a recession, if not a severe recession. So the fact that they now know that that could happen and they're thinking about moderating it reduces that probability of a severe recession outcome going into next year.
So, Larry, off camera, Errol and I like to actually discuss finances all the time.
It's true.
And we've seen a lot of people pointing fingers, blaming others for what was a poor outlook for a while. Do people deserve credit now as the outlook seems to be improving? Would you say that either the Fed or the Biden administration deserve some kudos in this moment?
Yeah, I think, first of all, I still think that we don't have an easy road ahead of us. You know, our base case is that we do have a mild recession next year. And I want to caveat that we think it'll be the third weakest recession we've ever had. So it will be mild. But what I think is going to the reason why I think it's going to be mild is because consumers still have a lot of cash sitting in their bank accounts. It's still around $1.6, $1.7 trillion. Not the 2.4 that we had at the beginning of the year, but still a lot of cash out there. And then the other point is that there's still a lot of people getting jobs. And I think that employment numbers coming out on this Friday is going to suggest that we're still creating around 200,000 plus jobs per month. And that gives people a lot of money to spend. And remember that you and I and all the consumers in the United States account for about 70% of this economy.
Yeah, but Larry, a lot of folks who are getting jobs may not be taking the jobs they really want, or they may not be these long-term jobs with the benefits that they enjoy. I'm just thinking of the rail strike that's kind of threatening the economy now, although there's a deal and it's got to go to the Senate and Biden. But what does all of this then, if this is a positive day, what does it mean for next year's outlook? Are we now tempering these talks of a potential recession?
I think what Fed Chairman Powell said today really takes off that severe outlook, right? And because there were people that were worried that we could go into a severe recession. And I think that's really important to really underscore, because if we get into a severe recession, it's really difficult to see what could really bring us out and really get us back to really robust growth. Because if you think about it, what's on the horizon? It's not a tech revolution. It's not an energy revolution. It's not a building of houses again. So I think they got to make sure that we don't go into any type of severe recession, because it could really be a deep hole to bring us out of. So having a mild one, I think we can navigate through that.
Yeah, we've all been hoping for that, the potential of that soft landing or a job loss-free recession. Larry Adam, thank you.
Thanks, Larry.
Sure.